And we'll get going, guys. Thank you, everyone, for being here today. Ryan Castle, the CEO of the Cape Cod and Island Association of Realtors. And I hope everyone good, Danielle and Jen, on the screen.
Yes.
Yes.
All right, great. Welcome to another edition of Zoomed In on Real Estate, presented by the Cooperative Bank Cape Cod, and we really appreciate them being our yearly sponsor for these every other month membership update webinars that we host. So couple updates for you guys, couple things we've got coming up. We've got two virtual CE classes remaining this year. We've got transactions start to finish, which is the CE course called Commonly Used Forms. That is this Thursday at 10 a.m. Anita Hill is teaching that, and she will be going over the new forms that are out there, the new contracts, and I'm sure. So please, if you're interested in that, take that class this Thursday at October 31st at 10 a.m. And that is one of the core classes for our Cape Cod Real Estate Specialist designation. All right. Also on December 17th, it's a virtual webinar for the Code of Ethics, and I'll talk more about the renewal cycle for the Code of Ethics this year as well. But that's 10 a.m. on December 17th. Now, upcoming in-person classes we have on November 4th at 9 a.m. We have Protecting the Protected classes in real estate. That is full, but you can get on the wait list by contacting our office. And then the Code of Ethics class is at noon live in person at our office that day. And remember, we'll get more into this, but the required classes to keep membership. Our members implemented the fair housing training requirement for membership prior to the National Association of Realtors. So it's in effect for this cycle. And then NARs kicks in starting January 1st for next cycle. But we have our own for this cycle as well. And so you need to be taking either protected classes or some other ways to satisfy that. And we'll talk about that. And then the Code of Ethics renewal cycle is also up this year. So you need to make sure you've taken Code of Ethics in the last 3 years. If you're getting our regular emails saying you haven't taken these, then you need to contact, if you have taken them, you need to contact our office. If you haven't, then you need to take them, quite honestly. So those are some of the things we've got. So the fair housing membership requirement that the members passed and put into our bylaws 2 years ago now. Ways to fulfill that is that you need to take the Protecting the Protected Classes course, which is a CE course that our association wrote, got CE credit for, as a way to dive deeper into normal fair housing training. We have it on demand, live in Pearl, our education platform. So you can take it on demand right there any day. You also are offering it live virtually and in person throughout the year. We have been. So while it might be full for the live in person coming up in November, we also, like I said, have it on demand as well. Additionally, you could also complete that requirement by taking the bias override class, barriers to fair housing course, or the at home with diversity certification. So if you have any of those, have taken any of those from NAR, then that also would satisfy our requirement. You just need to let us know you did that and send in the certification around that. Those are the things that satisfy our fair housing requirement, training requirement for membership that ends December 31st of this year. Also on November 14th and 15th, we have our accredited buyer's representative class at our office from 9 a.m. to 4:30 every day with Isabel Perkins. So that is on Thursday and Friday, November 14th and 15th. There is no cost to you, as NAR has made it available to you for no cost this year. That, like I said, that's live at our office. And then December 4th through the 6th from 9 a.m. to 1 p.m. we have the ABR class virtually. So no cost webinar to take the ABR classes with Kimberly Allard on those days. So please, if you haven't yet this year, we've offered several free ABR, no cost ABR classes already. Take advantage of these coming up if you have an interest. All right, Jen, are you on so we can have you kind of talk about what this um Preserving Cape Cod's Waterways event is on November 13th?
Yes, so this is a culmination of the Leadership Academies group that won. We launched a capstone project this year with our Leadership Academy, and each group presented in front of the board of directors their idea, and the winning team was able to move forward with writing an NAR grant. And so this is the result of all that. So what's going to happen is on November 13th at 1 o'clock, we're doing a lunch and learn at our office in West Yarmouth. And it's going to be featuring the Friends of Bass River and the Friends of Barnstable Harbor. And they're going to be doing a panel on preserving our waterways. They're going to be diving into key environmental topics impacting our local ecosystems and real estate landscape. The event will explore current wastewater treatment system changes, including eco-friendly septic solutions and practices. We'll discuss the positive strides the groups like the Friends of Bass River and Friends of Barnstable Harbor are making to keep our waterways clean, and how you can play a role. And so don't miss this chance to stay informed, engaged, and prepared to answer client questions on protecting our beautiful Cape Cod. So the registration link to sign up for that is on our website. It's a free event for all as a result of this NAR grant that was awarded to this group. And we're really excited to be able to present this topic to our members.
All right, thanks, Jen. And that's at our office on November 13th from 1 to 3. So
Correct.
please take the time to attend that. Also, Jen, can you talk a little about what's going on with our this year's Welcome Home Household Basket and Family Shelter Supply Drive, benefiting the Housing Assistance Group? This is something we've done every year now for about 10 years. So wanted to kind of, what are some of the logistics? I know a lot of people are familiar with it, but those that aren't, little backstory and logistics for filling up baskets and participating.
Sure. So this is a very popular initiative that we have every year. So the idea behind it is that when people are moving from temporary to permanent housing, they sometimes don't have all the items that they need in order to, you know, fill their house, so to speak. So a lot of times they don't have silverware, they don't have curtains, they don't have towels, things like that. So these are essential household items that people are really in need of when they're moving into permanent housing. It's a little bit different this year. For those that aren't aware, Housing Assistance is actually going to be moving 80 families into their new shelter on One Love Lane. And so they're going to be housing a lot of families that are going to be in need. So there's a couple of different ways you can participate. We call it the Fill the Basket Drive, a laundry basket, because that's an essential item that you need, in your home as well. And so you can fill the basket, with items like I already said, towels, you can do silverware, anything that, you think that you might need in order to, establish your home. But they're also doing something different this year where they've started an Amazon wish list. So if it's, easier for you to be able to then, go online and purchase something, if you don't have the time to shop, but you want to participate, you can choose those needed items and have them shipped right to our office. If you would like to get a basket to fill yourself, if you could please email our office, I'll put the email that you should use in the chat when I'm done speaking. And then there's also an in-kind donation form so that, Housing Assistance can make sure that they're recognizing those people that contributed this year. So that'll be happening from November 1st, so this Friday, through December 9th. And I think our goal is to fill 75 baskets this year. They have 80 families moving in. We usually do 75. It would be nice to get to that full 80. So if you would like to participate, we, would love it.
All right, thank you, Jim, very much for that. A couple other updates we have before we get into our program. Our leadership development committee's done their work and they put out our the new appointments to the board of directors for next year. And so they put up no opposed candidates, so it's one candidate for each position. So our chairman of the leadership development committee will elect on behalf of the whole membership at our board of directors annual meeting in November. We'll elect the new members of the board, and that will be Todd Magnick as the president, Steve Seaver is our president-elect. Jeffrey Klontz is our treasurer. Emily Clark is our immediate past president, will be the officer positions. And then coming onto the board, filling some seats that were open is Joellen Erickson as the Lower Cape director. She transitions from the MLS board over to the association board. And Kelly Murray, who's been on our finance committee, will come on as the large firm director for a 2-year seat, replacing the seat Jeffrey Klontz leaves open for moving up to treasurer. And then Beverly Como and Haley Nickerson were reappointed as at-large directors for their seats. So those were the additions for next year's CCIAOR board of directors. So like I said, those will be elected without opposition at our annual meeting in November for the board of directors as they elect those coming out of the recommendations from the Leadership Development Committee. So that is my presentation for today, and I'm going to stop sharing my screen. Chance and bring in Charlotte from the Cooperative Bank Cape Cod. And Charlotte, want to talk to you about what's going on out there right now, because the mortgage market has obviously been impacting the housing market for some time, but I think there is been movements the last couple months and lower rates. So what are people seeing out there right now in the mortgage markets?
So Ryan, people are seeing some improved rates in the mortgage market right now, especially when we're looking back to where we were a year ago. I do have some slides I can share, or we could just have a conversation about what's going on and why, because Danielle and Jen and I were chatting about this recently, saying, hey, didn't the Fed just drop rates? Why are interest rates increasing? And I thought that would be an interesting topic to jump into a little bit, because I'm sure others out there are wondering the same. And I'm trying to share my screen, but having some issues.
All right, maybe
Do you guys
now.
see that I have screen sharing capacity on the back
Yep,
side?
try now.
Okay, share, here we go. Thank you. All right. Think I should be good?
No,
Oh, I love technology.
there you go.
Perfect. Okay, great. Thanks. All right, so let me just move on. Today, I wanted to help us all make sense of mortgage rates, talking about the Federal Reserve. We thought the Fed was dropping rates, and then rates went up right after that meeting happened. Talking a little bit about where we've been, where we are, and what's coming, and taking into account some home buyer considerations and conversations. So starting out with the Federal Reserve and the Fed funds rates, this is going to be super high level for folks, and I think it's a really good way to break it down for our consumers as well. We've been having conversations with our buyers about interest rates as well and what's playing into some of those changes. The Federal Reserve, aka the Fed, is the central bank of the United States who lends money directly to banks who in turn make loans in the community. They're responsible for managing the country's money supply and interest rates through the federal funds rates. So when you talk about the rates they change the federal funds rate. And that's the interest rate that banks charge each other for overnight loans. They do that to raise and lower rates to influence the economy, either stimulating it with rate drops or slowing it down with increases to rates. So those increases make the cost of borrowing more expensive and discourage borrowing, and also discourage spending or slow spending, especially where people might be borrowing to spend. So the most direct rates effects we see are in the prime rate, which is tied to home equity lines of credit, credit cards, savings, CD rates, stocks and bond market, and then mortgage rates. So I mentioned that they don't directly, the Fed funds rates doesn't directly increase or drop mortgage rates. I have a nice little graph here that compares what happens and has happened since 2014 with the Fed funds rates versus mortgage rates, with the Fed funds rates being blue, mortgage rates being red. They are correlated. And as we see below, there are definitely some spikes and dips preceding or proceeding the Fed rate changes. And that's really due to market anticipation on adjustments to rates and reactions to certain reports that might affect what the Fed is going to do with interest rates down the line. So at the most recent Fed meeting, the Federal Reserve cut interest rates by 50 basis points, or half a point, in September, which was their first rate cut since March of 2020. As we can see in this chart, this meeting took place on between September 17th and 18th, and mortgage rates kind of bottomed out the following day and had been falling in anticipation of the Fed cutting rates, because this was so baked into the market. Economists were really just asking themselves, is it going to be 25 basis points? Is it going to be 50? Is it going to be 75 basis points? So mortgage rates reacted ahead of time, saying this is pretty much guaranteed. We're going to adjust our pricing now. And then we see rates come right back up the next day, which has caused a lot of head scratching with our consumers. And that was due to a little bit of a curveball that came out with the job reports on October 1st, where the jobless claims came in lower than anticipated, which meant, oh, maybe the economy is stronger than expected. So that reduced the expectations for another 50 basis point rate cut in the next meeting. And then interest rates increased accordingly pretty quickly, almost a half a point in the course of a week or two, which was a pretty quick increase. So trending, we do still have hope for falling interest rates. If we look back to where we were about a year ago, we were topping out near 8% for a 30-year fixed rate mortgage. And now we are seeing that rate in the 6.5% range. So we are just about 1.25 points better than we were last year, which is significantly improving the affordability for buyers in this really tough real estate market. And there is continued hope for rates to continue falling. The next two Fed meetings are November 6th and 7th and September 17th and 18th. There are two more 25 basis points, so quarter point interest rate cuts this year, followed by 4 more in 2025. So coming down 1.5 points in the federal funds rate is what's predicted. So what's that going to do for mortgage rates? We're really anticipating that that's going to put mortgage rates in the high fives at the end of 2026, averaging at around 5.8. So another little more than half point drop between now and then. It's going to be incremental and slow, and we're going to see dips and valleys. It's a really tough game for people to try to play this market, but it is certainly anticipated we're going to be in a better position, never to the point of those really great pandemic level lows, which the government somewhat intentionally put in place to help spur spending and keep the economy healthy. We want to talk about homebuyer sentiment and how these interest rates affect homebuyers, because I think so much of it is it's a perception. We love the idea of getting the lowest interest rate possible, but at what cost? What's interesting to look at, this is a report from the Maxwell Sidelined Homebuyers Report, which surveyed 1,000 people who are waiting to buy homes, and we've dug into what those triggers might be for them. The majority of sideline buyers are waiting for rates below 6%. So those folks who are committed to waiting for those sub-6 rates could be waiting for some time. And that does have a lot of opportunity though. And when we think about that amount of people coming into the market, if rates increase, we're likely, or when rates decrease and people flood back into the market, we're likely going to see an increase in home prices because we have such limited supply here, excuse me. And our supply and demand tells us that when demand goes up, supply is limited, those costs are going to increase. So we may very well see those increased prices canceling out the interest rate savings for folks. There's a huge amount of opportunity for our sidelined buyers, and the more we educate them, the more likely are we're going to get them off the sidelines and into homes ahead of interest rate drops, which is going to give them a little bit more opportunity in the market. Today's buyers who can refinance in tomorrow's market are going to be in a much better financial position. than tomorrow's buyers. If we talk about the preparedness of people who are sitting on the sidelines, the majority of them do feel very ready to buy, where we have just about the same amount somewhat prepared. So probably in their fact finding phase right now. So we find that there's a lot of opportunity there in educating people and trying to help them become prepared to buy a home. We've got a plug for these folks who are looking to buy. The majority, thankfully, have been pre-approved or pre-qualified with a lender. I think we all know how it feels to meet with someone who's ready to buy and has found a house that they want to put an offer in, and maybe the pre-approval is a bit of an eye-opener. So for those folks who think they're ready to buy or will be ready to buy when rates drop, we should really be looking to get them pre-approved today in order for them to better prepare, or to maybe open their eyes and say, I don't necessarily need to wait for rates to drop for me to enter this home buying market. Also, having a pre-approval ahead of time can give them time to work on credit, increase their savings, or identify down payment assistance programs and take first-time homebuyers classes, which can open up access to certain down payment assistance programs and a lot more affordable loan programs. It's my little call to action. So thank you all for your time. Let's keep the conversation going. My contact's below. Ryan, if you had any questions or things you wanted to.
Yeah, what is some of the more popular programs you're seeing right now? Are people still coming for helos? What exactly are you seeing as popular right now?
Overall, we're definitely seeing a lot of the home equity line of credit HELOC inquiries. People are using those to either fund a cash purchase outright. We're actually seeing a lot of parents taking out HELOCs to help their kids with down payments, to help them get into housing. Right now in the purchase market, we're still,
And how does that work? Is that a gift? Is that still the gift and all that stuff? So there's still limits on that?
It is a gift. Now, there are limits that limit your tax consequences, but you could gift as much as you wanted to in any given year. You would just really need to talk to your tax professional, and your recipient would want to talk to their tax professional to figure out.
I meant about the person to qualify, right? Child.
Yeah, there can be certain limits, but when we're talking about people buying a primary residence or their first-time home buyers, typically 100% of their down payment can be gifted.
Okay.
And we talked recently, Ryan, about a lot of the properties coming on the market being interfamily sales, being buyouts, being people passing. And we're seeing that as well on our side, and definitely seeing a lot of gift of equities in those interfamily sales being factored into those purchase contracts to help make it an out-of-pocket cost for our consumers. We're also seeing a big uptick in people looking at the FHA loan, where that had lost some popularity over the past few years just due to the competitive nature of the market. That does offer reduced interest rates below what the 30-year fixed rate looks like. And for people who are maybe not as, I don't want to say well qualified, but people with a sub 700 credit are really looking at that FHA option due to the low interest rate and the low mortgage insurance premium, really anticipating refinancing out of that in a year or two, once they can take advantage of lower rates, potentially remove their PMI, or move into a more secure program, because the FHA does have some caveats you want to be aware of with the mortgage insurance.
All right. Thank you very much, Charlotte, for that.
Thank you all. Have a great rest of your day.
Thank you. And now we've got Kate Berard, the MAR Associate Counsel, in here. And I asked Kate to come on because I think her and I are both getting a ton of questions around dual agency right now, and a lot of confusion out there. In the new way of doing real estate, I think dual agency, unrepresented buyers, both are kind of taking a more of a center stage. And so I think there is a lot of confusion out there around what it means to be a dual agent, where your loyalties lie, what you can and can't do. So Kate, I'm gonna let you get into this and talk about what people need to know on dual agency.
Great, I got to put myself on mute here to share. So hold on one second. All right, awesome. Thanks for having me on today. This is a topic that comes up a lot for me on the hotline, that comes up in conversations just about, unrepresented consumers, the increase in phone calls directly from a buyer to a listing agent, and sort of how to navigate that and where our sort of legal obligations stand. Remember, agency is a legal description, right, of your relationship with the client. And I think the most important thing to remember is that this position is really for real estate brokers and salespeople and attorneys. It's a high fiduciary relationship. It's a position of trust and confidence. It requires this complete allegiance. So the idea of dual agency, why certainly allowable under law, in my mind, should really only come into play in very unique circumstances. And we're going to talk about that a little bit. Remember, as an agent, you have these old car duties, right? And I think we remember this from taking our licensing exam, sort of this acronym sticks in our mind, but it's obedience, loyalty, disclosure, confidentiality, accountability, and reasonable care. And so when you take on a position of either a seller's agent or a buyer's agent, you're agreeing to that client for these particular things, right? You're able to negotiate in their best interest and to follow out their lawful instructions. When we talk about dual agency, we'll see how that gets a little bit blurred. Designated agent tends to be the individual agency that most of us take on, unless you're still in a traditional brokerage where each of the salespeople have that same relationship with the client as the broker does. Oftentimes, we find ourselves in a business model where each agent is designated to have all of these old car duties for that particular client. So when you think about designating yourself in this capacity and you look at what dual agency does, you really can understand how you've taken yourself from this old car level, this heightened fiduciary duty, and really reduced it down. You're in a position now where you're only owing confidentiality, accounting for funds, and reasonable care. So you've taken yourself from a position of being able to fully negotiate and represent your client's best interest to one that's really muddled. If you think about it this way, I believe it comes into play when you have a relationship with the buyer, you've been working with them, you have an agency relationship, you have an agency relationship with the seller, and some magic happens where they both need to come together on a transaction. In that scenario, these people want to stay working with you and are okay that you're reducing your position to, just keeping their private information safe, accounting for their checks, and moving the process forward as your license requires. Remember, I think that the position of dual agency was quite a bit easier to enter into before we started talking more sincerely about buyer agreements and what that looks like on the buy side of the transaction. And I think a lot of the calls that I get are, well, undisclosed dual agency is worse. And I think what our members are talking about, what happens in the scenario where the buyer calls me, wants to come see the property and says, I want to put an offer through you. I would say that that's not an opportunity for you to enter into a dual agency scenario. And I think that's where some of the pushback may come from, or some of the well, what do I do in that scenario? And I just think it's important to note, this is just a little extra information on dual agency. But it's important to note that when these buyers are contacting you, you're working as the listing agent. You already have an old car relationship with that seller. You're being contacted because you represent the seller in that capacity. So I think it's really important when we get this buyer call on the listing, or they show up at the open house, that we're keeping that agency hat on the whole time. And certainly I think what members say is, well, that's more work for me, right? These buyers are calling me directly. It's more work for me on behalf of the seller. And what I say back to that is we need to remember that when we're sitting down with the seller and thinking about what our costs for services are. I just think it's really important when a buyer comes to an open house, or they call you and they're there to see the property, you're showing that property in the best interest of your seller, right? And I think that's really where most of the questions come to me. I don't know, Ryan, if you feel similarly, that it really is this idea of like.
Yeah, I think
house
that's
buyer.
one of the big things that I was actually in a meeting where we broke out a question of, is like this dual agency. You have no relationship with the buyer. The buyer calls you. For for that property, yes, you might try to convert that buyer to a buyer client for other properties long term. But for that listing that you're showing them, you are the selling agent, right? And then, like, there's a difference, I guess, between trying to convert them into a buyer client for other properties versus that one for that one house that you already have listed.
Totally, 100%. And I think, so when this scenario comes to play, this is all gonna, come down to what your broker policy is, really. I mean, that's what's gonna define how you behave in these scenarios. But in my mind, if I put on that old car hat, that buyer who's calling me just to see that listing, doesn't want an agent, wants to get in the door, that's not a candidate for dual agency. Or that buyer who comes
And
to
you got no relationship with them. I mean, that's the
Right.
key, I think, right? Isn't it?
Right.
That they're coming to
Yeah.
see the house and you've never met them before. You don't have a relationship with them. It's not like you were already a buyer's agent for them and you're just taking them to one of your listings.
Correct. And I think what's important to note here is maybe where some of the confusion comes in is also a desire to follow these new practice changes, right? And so a lot of the questions that I get, well, the buyer needs to be in an agreement to see the property. And no, they don't. If you are opening up the door because you represent the seller, you are not working with the buyer, which is the first bit of where these practice changes came to be for residential transactions. You must be working with the buyer triggered by showing the home. So if you're showing the home on behalf of the seller, you are under no obligation to enter into an agreement with that buyer. The other point I want to touch on, Ryan, I don't know if you get this question, but there seemed to be like some misunderstanding about if I'm an agent for the seller, well, I could be a facilitator for the buyer. And that's not the case. A facilitator doesn't represent either party in the transaction. So just a reminder there, if you represent the seller, you're not a facilitator for the buyer. That buyer either can remain unrepresented, seek representation somewhere else, or you enter into that dual agency capacity. I do see a hand raised. I don't know if you want to take questions, Ryan, or if you want me to wait.
I wanted you to finish your thought there. So, Renee, do you have a question you wanted to ask?
I was just, as a listing agent, somebody comes to you and says, I want to take a look at your house. I want you to represent me. And I tell them I'm representing the seller. However, if you like me, I can work with you as a dual agent. At that point, I should be signing a buyer's agent agreement, right? Or not?
You should, yeah. But I think the scenario that you're describing is one of those gray spots where it shouldn't be a candidate for dual agency. Because now you're taking your position with your seller from old car to just car, right? So you're cutting it in half. And so I would be mindful of entering into a relationship that way.
So
All
what
right,
would you suggest? So you don't do a buyer's agreement?
I think that
you're not going to turn a customer away.
Yeah, but I think there's other ways to manage a customer without reducing your agency relationship for your seller. And those are really business decisions about what you do with those buyer leads that come to you directly. I certainly don't want to limit your business. I just want to remind everyone that it's a risky endeavor to take yourself from having a relationship that owes all these duties and reducing that to really someone off the street, right? Not someone you have a relationship with.
Kate, I do think it would go over well from a consumer standpoint if you say, hey, I'm representing the listing agent here. We didn't have a relationship. I have duties to listing agent of this house only. If you really do want representation, I can refer you to someone in my office. Or if you don't want to buy this house, I'm happy to work with you. And you see how well I treat my clients and care of duty in the future for them. So there's a way to kind of, I think, talk about it to actually show how well you represent your clients in that scenario.
Yeah, but my point is I don't want to turn away a buyer if I don't have to. I'd rather keep the buyer with me. And then you end up getting both sides of the deal.
Well, depending on what listing agreement you're using, I know MAR, Kate, y'all are going to be adding a clause to your listing in the clause banks for unrepresented buyers where sellers and listing agents could negotiate a fee for an unrepresented buyer on behalf of paid for by the seller for any more work you and the seller agree that you're going to do. I don't think it's live yet from the last time I looked, but y'all are planning to have that, right?
I'm not sure if we go that direction. I think you were
Okay,
in the
I
meeting
thought
where
it had been decided.
everybody was
Sorry.
pretty split. It's a possibility. I mean, people disagree with me. I live squarely in the camp of whatever you're charging the seller belongs on the body of the listing agreement, and it's sort of a risk that you take into that overall fee. I know all businesses feel differently about that. To your point, Ryan, if there's an addition for that sort of extra work or a subtraction if the other side is represented, I think it gets that piece. I think, Renee, the point being is that you have the underlying relationship with the seller. It shouldn't be so easy to degrade that relationship, right? Because you can't turn that part off. I understand your point of not wanting to lose the buyer side, but just remember your buyer is going to be in charge of what you're earning for that transaction as a dual agent as well. So it's a little bit different as it was previously when we're having these conversations and sort of remembering what that agency role really is.
And the
understand
CCR
that.
listing agreement does have that clause in there that if you and the seller agree and you are justifying it based and the seller agrees that you will do more duties for the seller when an unrepresented buyer, you could exercise that clause in there with the seller.
If the listing agreement says on it that your seller agrees to participate with paying, helping the buyer side, why should that become a problem? Or is that, I just don't want to put myself in a liability.
Well, I think that's what we're trying to avoid is Kate's trying to talk about how to avoid that liability of getting into violating your duties with the listing agent or with the seller, right, Kate?
Yeah, just a reminder of, how important and what a high duty you're agreeing to with that seller. There are, Renee, to your point, there are moments where everybody agrees and it works out perfectly fine. I think it's an area of high risk. So I'm more inclined to say if you don't have any pre-existing relationship with that buyer, then for that particular property, to Ryan's point, it could be referred out, could come with their own agent, could move forward as an unrepresented customer.
So I've got a couple other questions in here as well. Kate, I want to get at. So one's asking, obviously, if a buyer calls you to see your own listing, when you meet them for the first time at the house, you're presenting them consumer agency disclosure that you're working for the seller.
Absolutely.
And then what point is there guidance around your new, and maybe you get to the unrepresented buyer form? Maybe you have a slide on that. And then the question,
I do.
at what point do you use that? So we'll get to that question, then we'll save that question for later. But another good question came in, and I think this revolves around in Massachusetts, a real open question around teams, right? Is, if you're on a team and you have that buyer come, can you refer them out to a team member? But probably that's going to be based on how your listing agreement's written and your brokerage policy around teams, right?
Absolutely. Teams are not a legal construct. They're an advertising construct or a way to help each other. So it's always still the broker agent. So if you have a team of 4 or 5 agents, 2 agents, only one of you is designated for that client, that other team member is totally free to be designated to a buyer client. You have that wall up. You have to make sure you maintain that wall, of course. That's the, sort of the idea behind it, that you're not sharing all the information in that file with each other. If you do have a policy where you're sort of sharing all of the things about that relationship, then I would hesitate. But if you can keep up that wall, if you really have a team structure so that you're able to help each other or take leads, you're not all designated to that client, then you're not going to be putting yourself in a dual agency scenario. But to Ryan's point, again, it's really driven by broker policy, and I would ask those questions and see how you can clearly separate that relationship that you may have on either side of the transaction.
Yeah, because I know some brokers say, hey, if you're as a team, depending on how you're working together, you all should be on the listing agreement, you all should be on the buyer agreement, and then some others have those walls they can put up so that not everyone has to share all their clients, right? All right, so Kate, I'll let you keep going then, and we'll get to that unrepresented buyer form as well.
All right, so I mean, this question really goes through the same idea that we already talked through, so I'm not gonna continue to go through the same scenario, but I would say just a reminder, absolutely, the mandatory licensee disclosure is required no matter what. I have received some questions like, well, isn't that already embedded in the contracts? No, the law still requires that you provide that to the consumer, whether they sign it or not, indicating your role in the transaction. So right here, this question I get a lot. An unrepresented buyer attended my open house, scheduled a follow-up showing with me. I answered all the questions. Now they want their own agent. Can I tell that buyer that they can't have their own agent at this point? The answer is no. That buyer may choose who they want to represent them in a real estate transaction, and the listing agent cannot provide the buyer of that right. I think this question is even more important right now. We're not in the same scenario where the MLS required a procuring cause to be paid. That's not how most of these transactions are being negotiated. So I would just remember that point there. I think there will be further guidance as it comes to procuring cause at the start of next year, once we hear from NAR about that particular topic. But I will say as a reminder, a buyer, they really, they can choose whomever they want to represent them. If that comes down to a battle between who deserves fees that were offered out, that's separate from the buyer being allowed to have representation for a legal purchase.
All right. Back to some of these questions that we have come in. If your listing agreement with the seller includes dual agency, does that change or sway your opinion on becoming a dual agent when a buyer shows up at an open house?
Not a super bunch. I still think that it's supposed to come up in the off chance that it comes up. If you think about the law, oftentimes real estate before now, right? You're able to work across the state or whatever states that you are licensed in. Before, real estate was hyper local. So I think it could be very often that you would be working with a pool of buyers and a pool of sellers in the same exact market. And that may be the case right now. And I think that's where dual agency has its place. Again, I'm talking about a risk. I think you all have heard me talk about a risk meter for your business, right? I'm someone who's risk adverse. I don't like the idea of dual agency unless those scenarios come to be. But if you've sat down and had a very thoughtful conversation with your seller about when this can come into play and they understand and they agree, and you're doing the same thing on the buyer side, and you're keeping track of it, right? Keeping notes and making your file very complete, then you're following the legal confines of that. And I think as brokerage policy, you really need to decide where you fall on that risk meter as you're analyzing the best way to move forward there.
And then, the question came in around, I think we've answered this, but just to clarify for everyone, if an unrepresented buyer submits an offer for your seller, agrees to get an accepted offer, the seller required to pay the full commission to the listing office. I'm not sure what full commission means, and thinking about both your MAR's new listing agreement and ours, but given the seller's so if the seller's offering buyer broker compensation and you're not representing them, they're not required to pay the buyer broker compensation to you, the seller, if you're not representing the buyer, right?
For MAR's forms, that's correct.
Okay. And then that's where we're talking about, that's where the conversation comes in around a potential clause around unrepresented buyers that you and the seller can negotiate, that MAR is deciding whether to put in theirs or not. CCR does have it in their listing agreement. So to clarify that answer for June. And then I think you're about to get into the real estate, the brokerage disclosure, the consumer agency disclosure. But as you answer too, if you can talk about some of the latest around commercial for that, because I think there were some court cases recently on that, last couple of years. But the written agreement with buyers from the MLS perspective does not apply to commercial transactions. It only applies to residential transactions of 4 units or less. But if you want to talk about the commercial and the residential and the consumer agency disclosure, and then get into your next slide.
Yeah, definitely. So, my advice always is this form has been changed. It says residential on the form, but the regulations haven't changed. There is the Tolman case where it was a commercial property, and it's really just additional language from the judge in reviewing a decision from the board that says, why didn't you use it? I don't care that it was commercial. Why didn't you use it? So I think it's a pretty easy form to give to your client, no matter the type of property they're using or purchasing. Remember, they don't have to sign it. So it's important to keep a record of producing that document, in my opinion. Ryan had said, just before we jump on to unrepresented buyer disclosure, Ryan had mentioned certainly the practice changes through NAR implemented through the MLS do not require a buyer agreement for commercial or for leases. But I would say good practice generally, that is, if you're being paid for a set of services that another person agrees to, having that in writing in some capacity is really only helpful for you. So I would keep that in mind. For the unrepresented buyer disclosure, this is a great informational tool. I think this is not meant to blur the lines or allow you to sort of step over into an agency relationship, but really one to say like, okay, you've come to the house, you've received the mandatory disclosure, you've done the tour, and you're like, Ryan, I really want to make an offer on this. No, I don't want to be represented. This is the fifth house I bought, or whatever it is. This can be, I think, a good tool to help our members convey to that client, I represent the seller only. Any conversation I have with you is not going to be confidential. Any extra things that I do, any more door opening, any paper passing, any, sharing of conversation is all done for the benefit of the seller. Just to set the stage, like you're not jumping out of your role here. That's not possible. But anything that you're doing is really in furtherance of the success of the transaction for the seller. And then I think on the other side, buyer due diligence, I always remind our members, Massachusetts is one of the last remaining buyer beware states. Especially in residential, the disclosures are very limited, right? We know lead and septic. The seller doesn't have to answer anything else. You under your license, of course, do. But for a buyer who's unrepresented, I think it's important that they know they need to be in charge of these sorts of due diligence on their own behalf. This is not required by law. If they don't sign it, no big deal. Keep a record that you've shared it with them, at least conveying the information or sort of limit of your role in the transaction.
Kate, when in the transaction do you kind of think that they should do that? Is it at the showing? Is it as they're talking about presenting writing an offer? When would you advise them kind of in that transaction of dealing with an unrepresented buyer, you go ahead and provide that to them when you provide consumer agency disclosure, or later on?
No, later. I would say later, once they've indicated an interest in purchasing the property. Right? When they're like, can I have all the things? I'm interested in making an offer. This is when I would provide that to them.
And then we had probably one of the age-old questions that I know Justin and I recently debated for a while too, is what can a listing agent do with an unrepresented buyer as far as contracts, offers, I guess, is kind of where sees most of the line. But where do you kind of draw the line on, or is there one, or is it more of a risk reduction thing about what a listing agent can provide to an unrepresented buyer?
So I take, as I just told you before, I'm pretty risk adverse. So I take a position of the least amount as possible. I think the best way to do it is to sit down with the seller and get a list of instructions, right? You help to guide this. What needs to be in an offer? And provide that list of instructions to any buyer, whether represented or not. Therefore, you're not engaged in well, you need to put this in there, or you need to, adjust for this, or that's not enough time for a mortgage contingency. Stay away from any sort of guidance there. If the consumer decides to be unrepresented, let them be unrepresented, right? We shouldn't need to make it easier for them to get through the transaction, but we can do enough to pull it through for the seller. So in my opinion, that's providing seller instruction, that's providing a blank offer document. I know from MAR's perspective, and speaking with Justin, if it's helping our members through the finish line, that's fine to share. the form. They don't have to use that. You can provide a public list of, closing attorneys, for example. Someone called actually from the Cape, like, maybe you're providing a list of those attorneys in Falmouth, right? That's a public list. I would stay sort of in that realm when I'm thinking about what I can offer out. Remember, if the buyer is not represented by you, you cannot, under the law, provide them with home inspectors. So stay far away from that. I also think, disclosures of what is it, certain facts. A mayor has a form that's helpful. I think staying in the public resource side or conveying seller instructions is really the safest spot to be without pushing someone off or giving them too much guidance.
What about, using your electronic signature options, things like that, right? Like, hey, here's my offer. Can you send it to me for electronic signature, things like that? Like, I was wondering about stuff like that, right?
Yeah, so I mean, that to me is like a ministerial task, so long as you're not guiding them what to be in there. If you could push them to an attorney for the contract signature, I think that's even better, because then you're not, I don't know, they're not coming back at you because you sent it too late at night or they didn't see it, or, you want to sort of, in my opinion, remove yourself from any liability or any sort of, he said, she said, right? You're the only licensee in the transaction. So the further away from that you can stay, the better. Ultimately, if you send them, a DocuSign, luckily DocuSign has, stamps and verifies signature. So I think you're pretty safe there. But the quicker you can move the contract sort of negotiation signing over to an attorney, the better. Because Ryan, the Cape, primarily the attorneys draft the purchase and sale, or no?
Yes.
Yeah, so.
Bev, you have a question? Or follow up on some of the questions you asked, Bev?
No, you actually were answering all of my questions. I think one thing for Kate is, do you also encourage them to have an attorney write the offer rather than the listing agent do it?
Yes. Yeah, I think the further you can stay away from that, the better. But I understand that real estate is not a one size fits all, and you're going to have these buyers harassing you and texting you and wanting you to send them things. So I just wanted to say it's okay to send over the blank form. If they want to fill it out, you're going to be presenting the offer to your seller just as you would any other offer. I think this is a good time to bring up sort of setting a plan with your seller. I'm not sure. I'm sure the Cape has its hot pockets just like everywhere else. I had a member say that there were over 100 showings at a property, and she was having like 6 unrepresented buyers texting her and wanting the information. And, I think sitting down with your seller in the beginning is going to help to save a lot of time here as to what happens with unrepresented buyers when that's the case. And I think if you have a system of, here's the list of instructions from the seller, here's the paperwork, and you can just forward it over, that might be helpful, especially in a market like this.
Yeah, absolutely. And then I think, yeah, absolutely. So those are some of those questions. You want to keep going?
Yeah, I mean, if you want, I can. I did pull in a slide about home inspections. I can skip over to that if you want.
No, well, keep going if you want. If you want to add any more to this conversation.
Yeah, I just wanted to, remind us all about the code of ethics too. I mean, the first chunk in the code of ethics is really about how you treat clients and customers. And so just remember, even if that unrepresented buyer is not your client, they're still a customer, and you have duties under the law, under 93A, to treat them honestly. But you also have duties under the code of ethics to do the same. So just a reminder there. Same thing for paying attention when you're advertising or talking about the property to an unrepresented buyer, just as you would a represented buyer. You want to avoid exaggeration or any misrepresentation when you're going through the property. You really just should be a truthful presentation, which I'm sure you're mindful of all the time. The other idea is Article 3, the cooperation with another broker is for your client's best interest. It's not about money. Which I know we all understand, but everyone has different business practices. Lots of different business practices are sort of unwinding themselves over these last few months, and I'm sure over the next several months. So just be mindful of that, that not everybody's going to do it the same as you. Importantly, too, remember you need to make a disclosure if you have any conflict of interest or any financial relationship in the property. We have that conflict of interest form, so be mindful of that. Also, when you're providing any sort of professional references, I know we talked about attorneys before, for example, make sure that you're disclosing if you have any interest with those professionals as well. I think importantly here too, you have to disclose any recommendations that may give you a rebate or a referral. And that maybe is, you wouldn't get yourself in that scenario in a non-represented position, but just remember if you're getting any particular, I don't want to call it a kickback. I feel like that's a little bit of a bad term, but any benefit from those referrals, remember that. We're not going to go through the rest of these parts of the code of ethics, but it's important for you to remember, you have agreed to adhere to this higher standard, and that really applies primarily to your interactions with clients and customers.
Yeah, I don't know if you have anything on this, but before we leave the contract kind of dual agency discussion,
Sure.
can we talk a little about net gross? Unless you further on, okay. All right, great. So this has become a big issue that Kate and I have been constantly talking about, it feels like now, is that in MLS rules prior, for a little history, Cape Cod and Islands MLS did not have a net gross breakout in their listing commission, in their buyer agent commissions, offer cooperative compensation, until about 7 or 8 years ago. It was always gross. And then to kind of handle MAR's listing agreement, which had an option for net always, we changed our rules to allow a net cooperative compensation. And then in the MLS rules, you define what net is. Kate, without cooperative compensation, you and I are both getting this question about what does net mean now?
Yeah, totally. So the first thing I want to say is that net sale is different than net proceeds. So I just want to get that off the table. Net sale deals with deductions on the contract sales price. Net proceeds is what your seller takes home. So when you see net sale, it has to do with any reductions that are on the contract. And historically, that's something like, okay, I'm offering $500,000 to purchase your property, but I need a $5,000 seller credit towards escrow and prepaids. Your commission, the net sale on that contract is $495. That's what your commission would be paid off of. The gross sale is $500. So when you look at contracts now, what makes it more challenging, to Ryan's point, is that this idea of net gross sale was defined in the MLS as far as how to calculate the percentage of commission. When you look at a contract that now has commission on it, potentially, how can you accurately define that number, right? So if you have the $500,000 sales contract and you now have commission that has 1% on it, do you reduce the 1% from the 500,000 and then calculate the 1% commission? It doesn't make any sense, right? It's hard to remove that contractual deduction and come up with a correct percentage. So I know that this will be on the forms committee list to talk about. Maybe it's just doing gross only. Maybe it's a definition of what net sale is and how to calculate it. I'm inclined to lean towards the easier option, which would be gross sale. But it certainly is coming up as a question, like how do you figure out what that number is, and do you take into account the commission that is reducing the contract sales price or not?
Yeah, and the Cape Cod Forms PAG, our forms group will be looking at that at their next meeting too, on whether to keep it or not, as we had added that in that listing agreement. So yeah, it definitely is an conversation that seems to be coming up a lot right now. All right, Kate, you want to move on to what else you have?
Yeah, so this I really stole from Justin, as you all know. He has his thumb on new laws that are coming in, but we did talk about the home inspection. I just wanted to touch base on ADUs as well. These are things that are coming soon, so I think we have to wait and see what those guidelines will be. That's really the questions that have been coming to me, is that these laws are signed in. But what does that mean? We don't have the guidelines. We don't have, you know, the regulations. So I think the biggest one here is the home inspections. I've been getting calls about, well, I'm receiving offers that waive home inspections, or I'm receiving offers that condition them, or the seller came back and said, I can't have the home inspection. So these are not, this cannot become actual usable law until these regulations are promulgated. There was a first deadline of December that has been extended, and I'll have to confirm with Justin if the supplementary budget got signed in with this exact date. But the extension was requested to June 15th, 2025. I do know that Justin is already in conversations about the topic. We expect that these updates for our members will be in early 2025 with some forms revisions, in my opinion, likely around the contingency aspect of it. The language itself, I know this is a lot to read on the slide, but it's really about conditioning the acceptance of an offer or accepting an offer, you know, in advance that says I'm going to waive my right to an inspection. And I think the goal ultimately is to protect that buyer in the residential scenario. As I said before, Massachusetts, again, is buyer beware. With a market, I mean, this is what happens, right? When we have, to the point earlier, when we have such low inventory and interest rate issues and sort of this scramble to get into a house, you see things like, you know, appraisal gap waivers and home inspection waivers. And so I think this was an effort to really protect against, you know, the buyer missing out on discovering something important for the property. But it's really going to come down to what these regulations look like and how that's going to be replicated in our forms appropriately.
Yeah, Kate, and one thing about the home inspection that I think a lot of people get confused is like the home inspection contingency just allows you to not buy the house with the home inspection. It's not an automatic right to renegotiate. You know, I think some people kind of confuse exactly what the forms of the home inspection contingency does. So can you kind of explain that?
Sure. So, I mean, on our forms, they're pretty broad, right? It's a pretty broad paragraph that gives the buyer a lot of sort of flexibility in making the determination that whatever it is they inspected was not satisfactory to them. But it is a contingency, to your point, which is during this period of time, you're free to do whatever inspection it is that you like. And if you're not satisfied by that inspection, you have the ability to walk away from purchasing the property. If you decide beyond that date, well, you've lost that contingent part of it. And that's really where we oftentimes see debates over the monies that were put down on that first part of the contract. So it's not an opportunity to say, hey, well, it is an opportunity to try to negotiate
The seller doesn't have to.
position. The seller does not have to. The seller can say, yeah, no, thanks. On to the next one. It's not obligated. Oftentimes you do see seller flexibility there because going back on the market, depending on what the amount is, it might make sense. But in this market, we think about how many ready, willing, and able buyers there are that maybe they're less inclined, and they certainly are not under an obligation to do so.
All right. And then also with that, I guess I was also getting into the idea of home inspections, you know, for informational purposes or things like that you see out there. What's your guidance around some of that stuff that you see?
Yeah, so informational purposes only doesn't mean anything, unfortunately, unless the contingency itself is waived, that contingency lives on that contract. So I've oftentimes seen the contingency is there, and then there's a comment sort of, all it does is relay the buyer's position that they just want to find out about the house, but that doesn't take away their ability to you know, back away from the contract, excuse me, and assert their ability to do so under that contingency. So if
I mean, you can waive the contingency, but then reserve the right to have one that's not contingent on the sale, right?
Absolutely. Yep. Absolutely. And I think this all comes down to negotiating, right? Sometimes I've seen like, okay, if you want to look at it, you can look at it post-mortgage contingency, or you can look at it some other time to try to prevent people from discovering something without the contingency and having a low deposit, for example. So they don't keep the contingency, but they've only put $1,000 down. well, that's not a high risk, right? So if they inspect anyway, and they're just like, whatever, have my $1,000. So I think it's very much a conversation across the board, but just know generally that saying in informational purposes only does nothing to the contingency itself.
Because
So
if you want one and you don't have it in like access to the house for home inspection, you can't really get one, right? Like, I mean, you don't just get, if you don't have the contingency, you can't come back after, after P&S and say, oh, I want a home inspection, but it's not contingent, but I need access to the house. Does the seller have to give that to you? Unless you have that in there somewhere.
well, usually purchase and sale agreements allow, I think the standard clause is 3 visits. So I think if you're a savvy enough buyer, you could push to get into the property for that. But most of the time, those visits are not meant for a full-on inspection. I think if you want to inspect the property, but you're going to buy it anyway, then you should put that into your offer.
Awesome. All right. And you have any more slides as well? Does anyone else have any questions on anything Kate's touched on, or maybe something she hasn't touched on as well, to put her on the spot because she loves that, right?
Yeah.
But any questions from anyone else that I see? I don't see anything coming in. Or you can raise your hand or put it in the Q&A. Either one works for that. I know Serena, I think, has her hand raised, so I'm going to ask her to ask a question. Serena, come on.
I had put it in the question and answer, but I didn't catch the answer to that. So if I cannot show my own listing and I have like another agent from my team show it on my behalf, do they need to an unrepresented buyer? Can they just show the listing without a buyer's agreement, or they should have a buyer's agreement signed, which will not be signed, of course?
So, Serena, I think in that case, the first thing is to make sure that the seller's okay with you having someone else from your team show the property.
Okay.
And then I would say they're showing the property on behalf of the seller, so no agreement is required with the buyer.
Okay. Perfect.
Yeah.
Thank you.
Yes, exactly. And the question is, in the proposed legislative language, can the buyer choose not to have a home inspection? And I think that's where the confusion is coming up. Kate.
Yeah, so the language is not good, which I think maybe everyone knows, or maybe I know more that I read legislative language. I think that's where the comments from the Executive Office of Housing and Livable Communities is really going to come in, because I feel like it's confusing when I read it. Your conditioning acceptance, it applies to both sides of the transaction. So the paragraph that I get to is the two little I's. So if you see, if they understand in advance of the seller's offer that they're informing the seller that the purchaser intends to waive, I think this is the part that needs to be meted out, because ultimately that's what you're doing in an offer, right? You're saying, I'm going to put an offer forward and I intend to waive the inspection. So I think that's the part that needs to be sort of pieced out a little bit. In my opinion, it takes away the right to contract if it's so strict. So we'll see. I'm hoping it's more in line to like the lead inspection, right? A seller can't say you have to waive the lead inspection, but the buyer has that choice. I just don't read that in too little I.
So basically, yeah, I mean, a lot of this is going to be figured out between now and June 15th. And if you want to talk about that, I think that's where, while it's law, there's still the regulatory side. And if you want to talk quickly about how MAR deals with that too, because I think so many people think of our state lobbying efforts as just strictly legislative in the state house. And we haven't, you guys and Justin and you guys on the team really work on the regulatory side just as much, probably.
Justin, certainly, yeah. He spends a lot of time there. He's on committees too for housing. Audrey just was selected for a committee on energy. I mean, the point is to get involved in this part of it so that the regulations ultimately make sense for our members and don't do something that they're not intended to do. So yeah, he spends most of his time making sure that these work out in a way that makes sense.
Because they pass laws and then they have to write the regulations that go with that, and that's where a lot of the work is done.
Yeah, that's how the actual practice comes to be, right? Because a law is interpreted by the body that's given the authority to make those regulations. So that's where you have your licensing CMRs, right? Those are regulations that were developed out of the licensing board, right? So that's a good example of something that you're required to adhere to through those CMRs are developed by that agency. So same thing here.
And also, Kate touched on the by right ADU changes coming. We have several towns have fall town meetings. One of our towns, Falmouth, already has on their warrant this year to align their ADU bylaw with the new state law. So when that passes and starts taking effect, that would already do that. But for all fall town meetings, for if you're in one of those towns that have a fall town meeting, we have a video Leslie and I cut for each town, rather than doing a webinar as we have in the past, where we cut a video for each and we're making them available, and we'll have them all posted so you can see what's happening in each town on fall town meeting previews coming up, and those will be rolling out this week for those that haven't already been. So before your town meeting, we'll also make them available to everyone so they can see kind of what was happening all over the Cape for town meeting as well. But
That's
Kate,
awesome.
Kate, thank you so much for being here today.
Yeah, thanks for having me. Reach out on the hotline anytime.
Yeah, and the MAR legal hotline is MAR legal hotline MAR at marealtor.com, right?
Yeah, someone
You
pull
probably
up
have this somewhere
slide.
on the slide.
Yeah.
And just because I still get this question, which I think as much as we tell people, people probably know, but now starting last year it was expanded, and now an agent can call the MAR, email the MAR legal hotline as well. It doesn't have to be just the broker, right?
That's right.
So you and the other attorneys on y'all's team staff that, and we'll get back to them as well. Is calling or emailing preferred, or is there a preference?
Either way, just know like I'm on a call with you right now. So someone called during this time, I didn't answer, right? So if you send me an email, if it's really pressing, sometimes I can get back to you much quicker than going through the voicemails.
And I'm sure sometimes email facilitates a phone call, right? There's not enough information or things
Totally,
like that.
totally.
All right. Well, thank you guys very much for being on today. And Kate, thank you so much for that primer on dual agency and what to be looking out for.
Yeah, thanks for having me.
Thanks, guys.